Hey everybody, good afternoon. It is Saturday, June 4th, 2022. Hope you had a good week and your weekend's off to a good start. Obviously market's closed right now. So I made a video, I think earlier last week, maybe a week or so ago, about a day trading strategy. It's maybe 2 or 3 videos back on the channel. So this is going to kind of be, I guess, a redo of that one with a little bit more information. And also to show you how you might be able to use this on higher time frames, which I did mention in the video. I had it listed as a day trading strategy, entering on a 10 to 15 minute chart with analysis on, say, a 1 hour chart or higher. But of course, you could do that you can do this on any time frame. And this is, again, simple top-down time frame analysis. And then using a shorter time frame for your entries and using the higher time frame for a confirmation. Okay, so just really brief again, guys. I'll review what I have on the charts here. Now, for the 1 hour chart or higher, okay, this is a 50 EMA channel. Okay, and again, what it is, it's 350 EMAs. Put on the chart, one set to the high, which is the yellow, one set to the close, which is the standard setting. That's the red one in the middle, which I know might be a little hard to see on the video, but there's a red one in the middle. And then the blue one is another 50 MA set to the low. Okay, and when you put that on your chart, again, what it does, it forms a channel. It's kind of like a dynamic support and resistance, and it gives a little bit of a range for that instead of just having one EMA. This might help give you a little bit more confirmation or a little bit more confidence in whether something's a trend or not. Again, it's never going to be perfect. And the other thing I would advise that you do, if you're going to try this strategy, regardless of time frame, is that you put these on your chart and create a template. It's the easiest way to do it. If no matter what platform you use, create a template. And try it on different, and go ahead and back test it on different pairs. Now, of course, if you have particular pairs that you trade, that's fine. Put it on those, test it out. If you're not sure and you want to test on a whole bunch of pairs, you can do that. You can see I have about 15 or so pairs down at the bottom here. And I'm still refining them a little bit. There are some that I no longer trade this on because the pairs just don't do well with this type of setup. They go through these too often, and it's just going to create a lot of bad signals and give you some unnecessary losses. And there's plenty of pairs you can try it on. Okay, so that's on the 1 hour and up. Below that, say down on a 15 minute, these are this is also an EMA channel, but these are 200 period EMA. So again, 200 to the high, 200 to the close, 200 to the low. All right, so this is a 200. Okay, and then the other indicator that I use, and you can see I only have this again showing on the 1 hour chart and higher. It does not show up on the lower time frames. This is just a regular CCI, which is an oscillator. It's just the standard settings right out. It's a 14 period CCI, nothing fancy. It's in every trading platform, and you can just use this as an extra confirmation. You really technically don't need it at all, but if you want a little bit of extra confirmation, I'll show you how you can do this. Okay, so first I will start with a kind of more of a swing trading strategy, not necessarily day trading, because this is going to be using a little bit higher time frame. So you can see I'm on the 1 hour chart, okay? And so I always recommend using a time frame 4 to 6 times longer than your entry time frame. So if we're looking for entries on a 1 hour, of course you're going to look for trend. On this case, that would be the 4 to 6 hour time frame. Okay. Now some people might say, well, 1 hour you should be using the daily. I don't think that's necessary. I think a 4 to 6 hour, and that's plenty longer than a 1 hour chart. Use the 6 hour if you really want to be comfortable, but I would say if I was using a 4 hour chart for entries, then I'd be looking at maybe a daily chart for the higher time frame. But on a 1 hour, I think a 6 hour chart is plenty long enough. But that's up to you. Okay, and so the basic strategy is here. We obviously have a trend in place. We go to the higher time frame. Now you can see on the higher time frame, this uptrend started right about in here. So, using the 50 EMA on these higher time frames is going to filter out some of your entry in terms of getting in on the trend. So this is one of the kind of disadvantages, I guess, of using these 50 EMAs on the higher time frame. Some people argue to use a shorter one, to use like say a 20 on the higher time frame and then maybe the 50 on the lower. But if you use a 20 on here, and I already tested it on this pair, and again, every pair is different, every setup is going to be different. But if I change all these to 20, you see these right here, these big rallies, especially this one. In real time, if you saw this, you might think that this trend is changing because it changes this. It changes these EMAs from being up here to like way down here. So you have a clear bullish breakout. But you can see using the 50, it held these downtrends beautifully. Okay, so the drawback is that you're going to get some late entries into the trend by using the 50 on the higher. But the advantage is that it will smooth out and filter out a lot of false breakouts, okay, and keep you in the direction of the actual trend longer, which over here would have been a downtrend. If you had gone in long right here, you would have been stopped out, depending where you put your stop, because you can see the market made several new lows all the way down before it finally turned around over here. Okay, so that's kind of my justification. So here we are on the 4 to 6 hour. We have an uptrend. Okay, go back to the 1 hour. And this is the area on the 1 hour chart that I drew on the 4 hour. So this is where you would have began looking for your long positions, was in here, okay, and waiting for pullback. So this would have been the first high that was made on the 4 hour chart. So now you're going to wait for price to pull back into this range, okay, and you can see it came right back down into here. Now you could have gotten in long right here. You could have taken the trade right here. Now you would have ended up having to have a comfortable stop loss, because if you had put your stop just below here or just below the blue line, you probably would have gotten stopped out. And I've talked about this many times, guys, is that you've got to position size right so that you can give your trade room to breathe. And I always recommend going maybe one swing high or low, lower, at least one, for your stop loss, so you don't get hit with a stop run, okay, with a liquidity run. So in other words, instead of putting your stop here or putting it somewhere below this blue line, okay, because you can see, the big banks, big traders, they know that's where the stop losses are, okay. First of all, they can see them in the market. Anyways, you can't, but they can. So they know where all those stops, then there was probably a whole bunch of stops sitting right here. So they forced price down very aggressively. They sold the market, tapped into all these stops, took all these people out that were long, maybe triggered off sell stops, or people that were, looking for a breakout to the downside, trapped all of them, and then they screened the market back to the up. So instead of putting your stop in this area, maybe put it down below this previous swing over here. You can see you were nowhere near that. That's 37 pips away, and you're like, well, that's a big stop loss. Then, if the stop loss is too big, then either don't take the trade or start with a smaller position size, and you can always scale into it, okay? Because the last thing you want to do is miss out on a good trade, but you also, because you got stopped out because you were too worried about how much money you could lose if you were wrong. Whereas if you use a smaller position size, you're going to be comfortable, and if you do end up getting taken out down here, oh well, you don't take a big loss and you just move on, okay? Okay, so that's the first part of this. You're waiting for pullbacks into this 50 EMA channel. The deeper it pulls in, the better. You can see we did get a little touch here, and it started going. This probably would have sucked people in at this point, and I probably would have taken this too. And you can see then, they were not done tapping liquidity. But again, if you put your stop loss in the right place, you would have only had drawdown of, about 20 pips. Between this low and this low is only 20 pips. So no big deal. You had a 20 pip drawdown before the market went in your favor, and you would have had your stop loss down here. So no problem. Okay? So the other thing you're looking for is a break back to the upside. In this case, looking for up moves on the CCI. So if we look at where this broke, we're looking for the CCI to be crossing from the this negative 100 area, oversold area, back through this first dotted line, which is the negative 100 area, and that kind of confirms the resumption of the uptrend. Now, in this case, again, we had a little bit of a false breakout. It went back down again. Then we had another break up here. Okay, so you're going to obviously, the only thing you're going to use this for is confirmation. In this case, since we're in an uptrend, you're going to ignore any sell signals on this and only look at buys. And then we had another pullback here. Okay, where the CCI pulled back, where the market pulled back to the channel, the CCI pulled up. And again, we had the same situation again, where traders pushed this down, and then we had this stop run right here, and then the price went up. So you can see there's a pattern on this pair, and that's the other thing, guys. All these charts, all these pairs are very unique in their own way in terms of how they work, which is another reason why you don't necessarily want to trade too many pairs, because it's really hard for you to get to know each market. I hear a lot of people, though, say, well, you should only trade one or two pairs and get to know them really well. Well, there's a lot of sense to that. The problem with that I always bring up is that the fact of the matter is about 70% of the time, any particular pair is ranging. It's just range trading, and there's really no opportunity. It's not trending. And if you're a trend follower, if you like riding trends and you don't like trading inside consolidation areas, which I don't, then what are you going to do? If those two pairs that you're following are not trending, you're just going to not trade for weeks and weeks, especially if you're looking at a higher time frame. So you have to kind of find that balance between having enough pairs to look at to give you opportunities every week and not having so many that you're confusing yourself and getting stressed out looking at too many pairs, which I've done in the past. There was a time where I had 25, 26 pairs up, and I've cut that back, and I still continue to cut back even more, believe it or not. I think I still have too many, but I am getting better, and I will continue to cut some out and maybe get down to 10 or 12. I think that's a very reasonable number, because especially if you're using a system like this on a 1 hour chart, you're only going to have to look at this probably one or two times a day, because if there's either going to be an entry or there isn't, and if there's not, if it's already trending away from the channel, there's no entry until it comes back, and this can take a long time for this to trend back into the channel, certainly more than one trading day. So like I said, if you're looking for entries on a 1 hour time frame, you're probably only going to have to look at these pairs one time a day once you establish that there's a trend, right? So not really that big of a deal. Sorry, guys, I had to take a drink, not professional. Okay. So that's it, okay? And you're just going to continue to do this until the trend changes, okay? Now we see how the market closed on Friday. We're pulling back in. So let's see if this ends up being an entry next week. And then, we'll see how things go. Basically, you're going to determine if this does break and start breaking lower over here. Let's say this is the end of a trend and it starts breaking lower. Then we're going to wait for a confirmation on that on the 4 hour chart. We're going to wait for this to continue to break lower. And again, you might miss out on the first part of that move. That's okay. I'm willing to do that to filter out any bad entries and not be willing to jump in so quick. And once I get confirmation below this, the 50 start to turn down again on the higher time frame, then I'd start to look for shorts. But in the meantime, my bias here is still to the upside. And if we do get a definite break below these channels on the 1 hour, like I said, I'm looking for a break below the channel before I start to look for any short positions. So that would be, somewhere down in this area. So price would have to get down here. So if price breaks below here, as long as it doesn't really take out this swing low, then I'm basically still maintaining my bullish bias, although I probably would just not trade this pair if we get a definite close below this channel. I'll just wait and see if it bounces and keeps going, or whether we continue down, then I start looking for shorts. So if price does get into this area, basically anywhere into this area right here, then I'm just going to not trade this pair at all until the trend becomes defined again. Because what could happen is you could just enter into a consolidation phase, right? This comes down and then it just starts moving sideways, and in which case I'm not going to trade it either. So, keep taking the entries until the market tells you that something is going on. Either it's pending a reversal or a really deep pullback. or it's going into a sideways pattern, and then just stand aside and look for opportunities on another pair. Okay, so pretty simple. Okay, so that's and again, guys, you can do this on any combination. As I mentioned before, let's say you wanted to look for entries on a 4-hour chart, then I would look for entries on probably the 12-hour to the daily. Okay, because it's 4 to 6 times higher. Well, I don't have a 16-hour time frame on MetaTrader 5. It goes 12 and then daily. So probably the 12-hour to the daily, I'd look for my entries. Okay, so you get the point. I like to look at my entries on the 1 hour or lower. So I will trade accordingly. Okay, so let's say you want to do this on a lower time frame. So on the lower time frame, let's say a 15-minute chart, I'm using, instead of using 50 period EMAs, I'm using a 200 period channel, and I'm looking for confirmations off the 1 to 2 hour. Okay, so in this case, on the let's see, this is the Aussie dollar. Okay. Now, this is an area where perhaps we would not be trading this pair, and this is what I was just talking about. You can see on the 15-minute we've broken below the channel. Okay, so let's put a rectangle box around this price action. We go back to the 1 to 2 hour, and again, we're still well above, we're still right inside the channel. So I would not be interested in taking any shorts in here right now, until, if and when, the 1 hour chart, we get a really nice defined close below the 1 hour chart. Okay. Now, I know I just said previously that if you were trading off the 1 hour, you'd have to wait for the 4 to 6 hour. But remember, you can trade these counter trend moves, because intraday on a short time frame, that's still going to be a trend. So even though I was saying for an entry on the 1 hour, you want the 4 to 6 hour, and there would be no entry there right now. If you're looking to trade on the 15-minute, you still can look for that counter trend trade off the 1 hour, because again, you're trading on a short time frame, a 15-minute, so you're trading intraday, probably a day trade, and you can trade against the larger trend if you want, because you are only trading on a short time frame. Now, that's if you're more aggressive. If you are more conservative on your trades, then you would, again, maybe just skip this and not trade this below, not trade these shorts at all, because the higher time frame is technically still up. And you would not be looking for any shorts down here until these higher time frames also confirm. So that's your decision, and it really just depends on your bias of what your range of time frames and how conservative or aggressive you are on your entries. So again, because the 4 to 6 hour is up, even if we get a break below the 1 hour, you may still not want to trade this to the downside until the 4 to 6 hour begins to also turn down. But I would say you certainly could take trades off the 15 with the 1 hour being down. Those would be an intraday trade, day trades, and just understanding that you may not be in those trades for an extended period of time because the higher time frame is still up. Okay, so it really depends on your point of view and how aggressive or conservative you are in your entries. Okay, let's assume you're a little bit more aggressive. Then again, we do have a clear break below the 15-minute here. Below the channel, we do not have that yet on the 1 hour, so I would not be looking for shorts yet on this pair. I'd be waiting, because this still could turn and go back up. This could all just be a big correction from the 1 hour chart, and this could turn and go back up. So I will wait. So this is one pair right now. If I was looking for short entries on a shorter time frame, it would be on my watch list, but I would not be trading it right now. Okay, I'd be waiting again for price to get down, somewhere into this area, somewhere probably off over here. And on the 15, that would drive the price down a little bit further, and then maybe somewhere starting in this area, we'd start to look for short positions. Okay, so it doesn't have to really go that much further for that to happen. I mean, that's only to the center of this box is only 18 pips, so it's not like you got to wait a long time for this to confirm. Okay, all right. So again, on the minute time frames, the 10, 15, 20 minute, I'm using a 200 EMA channel. Okay. And on the 1 hour and above, I'm using a 50 EMA channel and the CCI. Okay, and again, right here. Okay, so let's look at one maybe to the downside. Okay. So on the 15-minute chart, okay, we have these pullbacks into the. And this is what I'm talking about. So on the 15-minute chart, we have these two areas of price that broke above the channel right here, right? And so this one especially is very aggressive to the upside. This is more choppy. But this one's pretty aggressive. So in real time, you might look at it and say, "Ooh, I'm going to be clever. Price is going to go to the upside. I'm going to jump in long right here." And then look what happened. Now, it did come back up, and maybe you would have ended up breaking even because it still ended up going back down. So this is why you want to use your higher time frames, because you see, potential long entries on the 15, but if you go to the 1 hour and certainly the 2 hour, there's clearly no entry to the upside here. Okay? So now let's say your bias here is still to the downside. Okay, so let's say you want to enter this trade. So if we go to the 1 hour and we look at the CCI at that point, just right here, this was that trade. Now, this wasn't the best entry because the CCI never got up above the 100 line, but on the next one it did. On this entry it did. It touched it and came back down, but still you could get in right here as it turns back down. Technically, the better entry was actually over here. So let's go back to the 15. This was technically the better of these three entries was right here. But you can see what happened. We had 2 attempts to stop you out. Okay. You would have had to have had, if you had gone in long right here, short right here, you would have had to have had your stop loss pretty high up. Remember I said putting it at least one swing higher? So instead of putting it here, you'd want to put it up here. And you can see, even then, you came pretty close to getting stopped out right here. But hopefully, if you have a good broker, this is the dollar Canadian. It's a pretty widely traded pair, so the spreads don't get too crazy unless there's like a news candle. Then you probably would have been okay. So again, I can't stress that enough, guys, with stop loss placement. If you had put your stop above, let's say you took the short here based off the 1 hour and the CCI on the 1 hour, and you put your stop here or even just on the other side of the channel, you would have been stopped out here, and you certainly would have been stopped out here. But if you had put it above this last swing high, maybe a few pips above this, you can see it easily gave you cushion even at this big pullback and allowed the trade to work out and eventually had a really nice down move. All right, so sorry guys, I had to step away for a minute. So hopefully that's clear. Now, again, guys, depending how much time you have on the charts is really the time frame you're going to have to pick. If you don't have a lot of time, if you're looking for entries on a 15-minute, you're going to have to spend more screen time because the market's moving faster, and you're going to have to make sure you're watching the pairs that you watch for these setups to occur, because they're going to move pretty quickly because you got, it's only a 15-minute chart, and if you're using an even shorter time frame, which I don't recommend, but all the much more. Okay, so if you don't have a lot of time, then that's why I like the 1 hour. The 1 hour is still a plenty short time frame. But it's long enough where it's going to, make your screen time less, and also it's going to provide generally more quality signals. You won't get as many, obviously. The higher you go on the time frames, the fewer signals you're going to get. But generally speaking, the more high quality those signals will be. But I'm also going to tell you guys, and if you've been trading Forex any length of time, you know this, is that it's also very important the time of day you're looking at the charts, okay, regardless of what time frame. Because the fact of the matter is that the two main times of the day when Forex is most active, generally, is going to be the London Open and the New York Open, okay? So I don't trade a lot of London Open, which I wish I could, because that is by far the bulk of the Forex volume happens during the London session, especially those first couple hours. But that's 3 o'clock in the morning my time, and I'm just not up that early. Once in a while, I will, if I'm not sleeping well, I may roll over and take a look, but it's generally not a good thing to do, trying to look at your charts when you're half asleep, okay? So you gotta recognize your limits. But the New York Open is certainly a close second, and that's when I tend to look. So even though if you're trading off a 1 hour or a 15-minute, you also have to really make sure you're looking at the right time of day, okay? If it's, if it's like early afternoon after the London session is closed into the New York session, probably not the time of day I'd be taking any trades, because once London closes, the market tends to consolidate, And if you do get any movements, they're usually false moves, and they're gonna quickly go away. So again, guys, regardless of the time frame, you have to look at the charts at the right time of day. But that being said, if you're using a 1 hour chart, you're probably only going to have to look at those key areas during the day, because there's either going to be a setup or there isn't. Okay. Now you can also trade the Asian session, particularly after 7 p.m. New York time. That's when Tokyo opens. The first 2 hours of the Asian session I would not trade because it's only Sydney. But at 7 p.m. Tokyo opens, and volume will go up during after that time. So if you see a setup during the Asian session, you certainly can trade it then, especially if it's an Asian pair, a pair that has either the Kiwi or the Aussie or the Yen in it. Those are the best ones to look at. But I will warn you, and you can go back and see this on your charts, many times the moves during the Asian session, not always, but many times tend to be counter trend to what happened during the day on the New York and London session. And what that means is if you take a trade during the Asian session, if I did, I can tell you 90% of the time I will not keep that trade open more than a few hours. When I'm ready to go to bed, if I'm still in the trade, if it's in profit, I will either move up, maybe run a trailing stop, or I'll move up my stop loss, or I'll just close it altogether before I go to bed. I'll try to keep it open as long as I can, because obviously try to squeeze out. But I don't want to be in that trade when London reopens at 3 o'clock in the morning, because there's a high probability it will reverse itself. And you can see that on the chart. If you go back and mark off your trading sessions, and there are indicators that you can get on your chart that will mark the trading sessions for you, you can go and see for yourself that many times during the overnight, the Asian session will be in the opposite direction of the day session. So if you do take a trade during Asia, because that's the time you have to look at it, and you see a good setup, I would definitely take the setup. Just understand that you may not want to carry that trade all the way into the night, and at least be out by the time London opens. Just my advice, okay? But anyway, so again, it's important to figure out what time frame you're comfortable doing your analysis on, but it's also more important, I think, the time of day you're looking. So really you're looking at London open, New York open, Tokyo open, not Asia in general, because Asia in general, the first 2 hours is, again, just Sydney. So that's Tokyo is 7 p.m. New York City time. So depending where you are in the world, you got to adjust that. But so either the London Open, the New York Open, or the Tokyo Open. Those are the 3 times you can go through your charts. 1, 2, or all 3 of those times, depending what your schedule allows, and look for these entries on there. And if you want to just use the 1 hour, you can very quickly, and you can almost tell immediately, does it look like there could be a trade during that time. If I come to my charts and let's just for a laugh, let's just say this candle right here. I'm just making this up, guys. I'm not even looking at the time. But let's say you come in and it's the start of the New York session, and you see that this candle, this market trading, and there's no setup, right? It's nowhere near the moving averages. It's not, trading into, it's not trending, it's not in there or very close to kind of going in that direction where there could be a setup in the next, couple hours. It's just going straight down. Then there's no entry. I move on. There's no entry. Now, if I look and it's something like this, on the other hand, at one of those key times, this might get my attention, okay? Because we have choppy price action heading back. I'm not saying I'd get in right here, but I'd be much more interested in looking at something like this for an entry than I would be if it was here, completely away from the moving averages. There's no entry. You've already missed this move. It started back here, and do not chase the market, because as you can see, it didn't go down much further, and then it reversed, and you probably would have had a loss or a break-even trade on your hands, and it's just a bad entry. Okay? So figure out what market sessions you're comfortable with, and do your analysis, preferably around the time of those session opens to maybe 1 to 2 hours into it, because sometimes it takes a couple hours for it to set up. So if it's Tokyo, so you want to be looking at the charts somewhere between 7 and 9 p.m. New York time, If it's the New York Open, that's 8 a.m. So between 8 and 10 a.m., 8 and 9, maybe a little earlier, maybe 9:30, but that first 1 hour to 90 minutes. And the same thing on the London session, the first couple hours of the London session. That's when you're going to look for your entries. They might not be there immediately when the session's open, but if you see price kind of trending very close into one of these areas, then that should at least get your attention and something just to kind of watch for a potential entry. Okay? So, so that's really it, guys. So again, you want a verified trend on the higher time frame, and the higher time frame should be at least 4 to 6 times higher than the one you're looking to enter on. So again, if your entry's on a 1 hour, look for 4 to 6 hour time frame for your trend. If you're looking to enter on a 10 to 15 minute, then I'd go to a 1 to 2 hour chart for your trend confirmation. Okay, and look at it at the right times of day, at session opens. And look for price action around those times that are suggesting that an entry could be forming. Okay, and remember to put your stop losses not right above your entry and not right above the channel. Find like the next recent high or low, such as over here, and put it a few pips above that. Give your trade some breathing room, because very, very likely you will get a retest back into that area again as the larger banks try to knock out people's stop losses and take their liquidity and then run it in your direction. And there's nothing more frustrating than that. We've all experienced it. Okay, to see that you picked the right direction, but you weren't on board because you got stopped out because you put your stop too close, which probably means you were not confident about the trade, or more than likely is because you had too big of a position size and you were risking too much money. And so, because of that, you picked too short of a stop loss, and that worked to your disadvantage. Okay? And then that's it, guys. If it's a day trade, you're probably going to be out by the end of the New York session or the end of the Tokyo session, whichever. If it's a swing trade, if you're taking it on the 1 hour chart, you might want to get out at the end of the New York session or the Tokyo session, but you might want to hold into the next day if it's clear it's going to keep going. So that's something you have to determine for yourself. Okay, but you should let your winners run as long as you can, though. Cutting them off just arbitrarily is going to, in the long run, is going to hurt your account growth. So, all right, guys. So I will leave it there. A nice day or swing trading strategy that you can use. Simple, reliable, pretty mechanical. You should be able to just quickly scan through charts and just, at those right times of day and look for potential setups. If there's none there, move on to the next one. And you should be able to find hopefully a couple of entries a day and play those out, whether they're day trades or you're going to hold on for swing trades. All right, guys, please smash that like button. Helps the YouTube algorithm. Subscribe to the channel in the lower right corner if you can, and ring that bell notification below so you're notified when I post a new video. And obviously, any comments, questions, leave them in the comment below. And I hope you guys have a good weekend, and we'll talk to you next week. Thanks.